Well, hello again, traders, and welcome out. This is Ankit from Cryptocurrencies here, and this class we'll be talking about ATR, also known as average true range. It's one of those mostly commonly used in secondary indicator, and personally, it's one of those few indicators that I use in my day-to-day trading. So let's kick off and start off with the Maverick key concept that trading is trading, and everything that you ever trade is simply a symbol, market price, and a measure of volatility. So if there are more buyers and sellers, the prices will go up, and there's more sellers than buyers, and the prices will go down. So volatility is simply telling you the speed at which it's really moving, and average true range does a really good job at measuring that. So this is one of the simple indicators that gives a lot of information about volatility, about any stock, index price, or currencies, or any symbol that you're looking at. It will actually give you that information. So average true range is calculated by taking the range between the last two candles of the high and the low. So the high and low prices for all candles, and the period that could be adjusted or modified based on how higher and lower time frame of data that you're looking for, and it averages out. So it tells you when the volatility is rising or when the volatility is falling, and which is important as market continues to change on a day-to-day basis. So what's ATR telling us? So it's giving information that what's the move per period. So like in currency world, we're looking at it in terms of pips. So how many pips is really moving in that time frame, and what's the percentage period per period for that as well. So that kind of gives the information of how much something is moving, both on amount basis and percentage basis. Now, it also gives you a good job at giving you indication on the trend strength. So rising ATR will tell you the ranges between the highs and the lows, and they're getting larger, which means that the strength is actually getting stronger. And on the other hand, falling ATR shows us that the momentum is actually on the downside. So let's take an example. What's ATR telling us in this one? That this pair is sitting at 121 and has an ATR of 92 pips. So this is a daily chart. So it's telling us that on a day-to-day basis, it's actually moving by 92 pips. And as you can see on the other example here, this pair is now sitting at 130 and has an ATR for 145 pips. So two different periods, but then the volatility actually has gone much higher, and as you can see, the ATR has been strengthening as well, which means that this currency is actually on a move, and it's actually the volatility is actually rising on this one. Now let's take another example with percentage period. So the way it's calculating is that it takes a look at the amount of pip that's moving on that candle, and you divide that by the price of that pair, and then that gives you the percentage change that it's really moving. So it's giving the very similar information, one on number basis and one on the percentage basis. Now let's take a look at another example, and in this case, the ATR is at 145 pips. And again, dividing that with the price of 130, so that's about 1.1. So we can see that in these two different examples, the ATR is actually rising, gone from 0.76% to 1.1%. Now let's take a look at the ATR trends. So in this early stages, you can see that the trend is moderate. It's actually moving slowly higher, and then it goes into the sideways period where it's actually in a no trend. And then later on, that's met with a much stronger trend, and you can see the ATR actually start to rise rapidly. So this is again a good example of how ATR is giving us information about what's happening in that chart. And you can see that usually when things are going sideways, and after that big strong trend, the sideways trend started, but the ATR start to fall, which means it's really not ready to jump in that position yet, because now consolidation is where the volatility will start to go down. But as long as the range is there, range is holding up, it's still a good candidate. So that's something you will experience in both of those high basis and low basis setups.
Would having more trading capital help you meet your trading goals? Cryptocurrencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
So now looking at using the ATR to assess volatility, these two examples. So we have CAD Swiss franc on left side and Aussie dollar on the right side. Similar price point, but you can see on the left, the ATR is actually at 0.46 pips or daily movement of 0.63%. But one of the things you notice is that the trend is actually, the ATR is actually been rising, which means that this currency pair is actually it's moving, it's on a run. On the other hand, the Aussie dollar, their volatility is a little bit higher in that currency pair, but we actually take a look at the ATR. The ATR is telling us that this thing is slowly building up, but it's not ready to, or it's not really moving in that particular fashion where the big moves are taking place. So it's telling us that maybe the Aussie dollar likely to have more movement in the future once that ATR start to kick up. So the Maverick key concept is that the most common reason the amateur traders fail is poor placement of stop orders. I see that all the time, that the position, the stop is just too tight and not factoring in the volatility. It doesn't matter if you're even though you're right on the direction, you just don't get to survive that volatility because things are just moving a little too fast. So every position needs to be adjusted for price and volatility. And again, that's something will change from day to day. So if you're holding a position longer term, that is something that you need to account for as the volatility is falling and rising. So the proper ways to utilize the ATR is you identify volatility. So ATR will tell you, what to, it will give you indication and the strategy that they can pick. Trending the strength, I really like that because using the rising and the falling ATR really gives you an indication of this the strength in that trend. And most importantly, stops. We get the stop, we get to pick the stops, and we can decide if we can be. Let's use this as an example over here. In this case, the entry is at 128.15 and the stop is at 128. So looking at the ATR, that's close to about a 1-to-1 ATR, and you can actually decide how conservative you want the stop to be or how looser you want the stop to be. So on a general rule, 1 ATR, that's a tighter stop. You don't want to go anything less than 1 because that's just the average movement in that currency pair. Moderate stop, that's 2 times the ATR, which is commonly used. Give yourself enough wiggle room, but it's not too wide enough. And if you really want to play this on a much bigger scale, then you can have a 3 times the liberal stop. So these rules can vary based on how aggressive your strategy is. There are times when I'm more aggressive on stops, and there are times I'm more liberal on stops. But you can use that metric to kind of decide and making sure that your stop is just not too tight. Make sure it's at least 1-to-1 with the ATR. So let's do a quick review. So ATR measures the move of any symbol. So you adjust price and volatility for underlying symbols. So you identify strength. It helps you do stop placement, stop management, and something that you can use on any chart, any symbol. It will give you a really good indication on how to adjust and manage a trade. That's or either you're entering a trade beforehand or you're managing a trade. This tool can be used on both times. So thanks for watching. I'll see you in the next video.